All right. Welcome, everyone, to the November edition of the My Million Year Monthly Speaker Series. I'm your host, Bryant, and joining me is my co-host, Ed. We're both life coaches, and our goal is to help our community members realize and achieve their dreams. Now, November truly is a month for showing gratitude and appreciation. On November 11th, we celebrated Veterans Day, honoring our veterans and paying our respects to those who have served to protect the people of this nation. Thank you to all of our veterans and military families for what you have done and continue to do every day. In less than 2 weeks, we'll also be celebrating Thanksgiving, acknowledging the fall harvest feast between the Native Americans and the Pilgrims who sailed from England in search of a better life. We continue that tradition today by reflecting on what makes us all grateful in our lives and spend time with our loved ones, friends, and family. With the craziness of the last 2 years, we wish everyone here an autumn respite and a wonderful Thanksgiving holiday. Now, folks, the world continues to be obsessed with cryptocurrency. Coinbase had their big IPO in April. There's stats showing that at least 1 in 10 Americans are investing in coins, and that number grows daily. Even the recent Squid Game had a crypto coin, which unfortunately turned into a bit of a scam. But that said, standing behind crypto is a powerful technology known as blockchain, which has great potential to change the world in ways that extend beyond just investing in your latest Dogecoin. So later on the call, to help us understand the foundation's challenges and the future of blockchain and crypto, we're going to be talking to industry expert Peter Borovykh, a blockchain product visionary and author of the book, Blockchain Applications in Finance. But before we follow Peter down the DeFi rabbit hole, it's going to be our financial tip of the month. As Ed presents, feel free to type questions into the chat. And at the end of Ed's segment, feel free to ask additional questions. Now I'm going to turn things over to Ed for the financial tip of the month. Go ahead, Ed.
Awesome. Thanks, Bryant. Let me share my screen. So the tip of the month this month is on 529 plans, something that this group may have heard about, but it's another tax-efficient vehicle for education. So we're going to go through that here. So the 529 plans have a lot of tax benefits. The main one that people are probably familiar with is tax-free growth. So this is pretty similar to a Roth IRA in that it is after-tax contributions that you would put into the plan, and any growth that happens in the plan can be withdrawn tax-free as long as it's spent on education. The other piece of this that's actually really powerful, especially in some states, this varies, is the contributions are actually tax deductible. So if you live in New York, that's one of those states, contributions up to $5,000 as a single person or $10,000 for married is tax deductible, which is a nice additional benefit of 529s. Not every state has this. New Jersey is one of the states that doesn't have this. But if you work in New York and live in New Jersey, then because you're paying New York taxes, this would still benefit you. So one of the tricks with 529s is that it needs to be used for educational purposes. So it's not as flexible in some senses as a regular investment account or even a Roth. So 529s are used for a wide range of different education expenses. So typically college, but recently it's been opened up for K through 12 education. So if your kids are in like private school, you can use that for K through 12. As well as like books, laptops, anything education related. If you don't use it for college or any kind of education expenses, there is a penalty on the earnings. So that's an important part to remember, that the penalty and taxes would be applied, but it's only on the earnings portion. So there is risk here if you over-invest and you don't end up needing the money or to spend on education. There are some waivers, like if the beneficiary has a scholarship, you can offset that with the 529. So there are some waivers here, but that is the risk of putting money into a 529 plan. one of the benefits here of a 529 plan is that it is flexible in who you designate as the beneficiary. So you can actually designate yourself as a beneficiary, even if you don't have kids, and then you can transfer it to your kids later on. So you can take the benefits now and then pass those on later. Also, if you end up having kids and maybe they don't go to college or they find some other path, you can always switch the beneficiary to someone else, to grandkids perhaps. So there is some flexibility there in how you spend the 529. So let's see what this looks like in action and what the savings could be. So assuming there's a couple who lives in New York City and they contribute to the maximum for tax deductibility, which is $10,000. And this couple is making over $200,000 a year, and their tax brackets, their marginal tax rates are 6.41 for New York, and because they live in New York City, they have another local tax, 3.88. So as soon as they put this money into the plan for that year, they can deduct essentially 10.29% their marginal rate, and they will save over $1,000 in taxes immediately. So that's a pretty great benefit. To essentially make a 10% return on your money just from putting that money into a 529. This $1,000 played out over the course of 18 years, assuming you start when you first have a kid. It's not just $18,000 in benefits, because you have to think about the tax savings that you would have at the end of those 18 years. So assuming someone does this for 18 years, they put $10,000 every year and a rate of return of about 6%. The 529 plan would have about $300,000 in it. And then if you were to compare that to just saving in a regular investment account, it would have maybe around $250,000. So about a $50,000 difference in putting money into a 529 for those 18 years versus a investment account. The risk again being it needs to be used on education. So it's definitely a powerful tool that's out there, but everyone needs to evaluate the pros and cons of trying this. So this is something that I do as well, and I'm actually someone that designates myself as the beneficiary. So I'm getting those tax savings now when I'm in high tax brackets, and see how that grows over the next decade or so. Any questions on 529s? Pause here. I know this tends to be a bit of a younger crowd, so people maybe aren't thinking about their kids' education expenses yet. But like with Roth IRAs, money put in here because of the benefits of tax-free withdrawals, the longer the money is in there, the more valuable it is.
That's a great point, Ed. I'm glad you're sharing this particular tip. It's often a vehicle that people may not realize is an option to them. Even if you don't have kids, you can still open a 529, and it becomes a very tax advantaged account to put money into after perhaps you might have exhausted all your other tax advantage investing accounts. So for those who do anticipate either having children who will pursue higher education, the 529 is a great plan. It's also something you can use for yourself as well. It can be transferred to other family members. It can be used intergenerationally, so it could be passed on to grandchildren as well. You can change the beneficiary at any time, as Ed mentioned, which is really important.
Yeah, and definitely I think the point about having other investment options is good. This is just one more tool in the toolkit that we've talked about a host of things: HSAs, Roth IRAs, backdoor Roth. So just another one of the tools to consider when we think about financial planning.
I love it, and it makes perfect sense. I mean, we're very big on education here at My Millionaire, so 529 plan fits in perfectly in that personal finance strategy. Thanks, Ed.
Awesome. I will pass it back to you.
Awesome. So with that, we're now on to our community building segment. So for those of you who are new to the call, we have a 10-minute community building segment where we give our audience members a chance to talk to each other, get to know each other. So we'd like people to introduce yourselves, name, location, job. Ed's going to send us in a minute into different breakout rooms. So we'll be in smaller, more intimate groups to have conversations in groups of maybe 3 or 4. And as sort of an icebreaker, in addition, we have a community building question of the day. So today we're going to have 2. The first question is, fittingly, since it's November, what are you most thankful for this year? And then a more random question of the day, if you could invent something, invent anything in the world, silly or practical, what would it be and why? All right, let's go have fun with it. Ed, let's send us off to the breakout rooms and we'll see everyone back in about 10 minutes. All right, we are indeed back. Thank you all for rejoining. Hope you enjoyed the breakout sessions for community building. It's always a treat to get to talk to new faces and old faces on the call and get to share perspectives. Especially nowadays. So with those community building questions, please post your fun answers or serious answers in the chat. Would definitely love to share with the group. What did you feel you're most thankful for this year, and what was your invention? If you could invent anything in the world, we had a lot of good ones on the chat that I just came out of. So please share yours in the group chat down below, and we'll read them. We'll read them as we go along. Now, without further ado, we're on to the main event with my friend Peter Borovykh. As a reminder, folks, additionally, you are welcome to type questions into the chat for Peter that we can ask him as we go along. I'll also try to leave some time at the end for you to ask Peter questions directly. But for kind of a reintroduction, Peter is a product visionary involved with a large number of blockchain startup and enterprise projects across blockchain, crypto, DeFi, NFTs, all the way from ideation through production. He has been a product manager on a number of projects that we can't go into specifics for due to NDAs. He is also the advisor at Columbia University's Lab to Market Accelerator. Peter is also the author of a book, Blockchain Applications in Finance, and has been featured in a number of publications, including Forbes, Business Insider, MSN, Yahoo Finance, and Bitcoinists. He's often talking and sharing his views on blockchain and crypto at conferences around the world. And he's also an alum of NYU Stern, my alma mater, where we first met many, many years ago. Peter, welcome to My Million Year. It is so great to have you.
Thank you so much, Bryant. And without further ado, if you guys are all alums of NYU, please add me on LinkedIn because I would like to keep that. And if you're not an alumnus of NYU, still add me. I'm pretty unique. There's only one person with my first name, last name. So, and David, thank you so much. You already added me. So, thanks.
Awesome. Well, Peter, it is so wonderful to have you. This is a hot topic. People really want to know more about blockchain and crypto. So let's dive right in. How long have you been working in blockchain now, Peter?
I would say 5-6 years overall, since 2016, 2017, like really aggressively as far as the blockchain technology. First introduction to blockchain was back in 2013, when I've been involved with quantitative research for alternative assets. One of those assets has been Bitcoin. And of course, the first reaction for somebody like me, who is from kind of the Wall Street background and from Stern, when we do have the financial management and like discounted cash flow models, of course, the first idea was that Bitcoin is a total scam. Despite us doing the research for one of the clients back in 2013, of course, I do regret not mining it back then, although I had those ideas. But like really aggressive as far as blockchain, that was like 2016, 2017.
Got it. And so, you mentioned, starting off on Wall Street, and looking at Bitcoin, crypto as a potential alternative investment. What were your first roles in Wall Street, in finance?
Yeah, so I graduated from Stern well, I was supposed to graduate 2009 in May, but then there was this whole Dodd-Frank,
Financial
financial crash, so
crisis, we know.
literally no jobs, literally nothing. Like
Yep.
everybody was depressed,
Right.
Especially marketing majors. No offense
Mm-hmm.
to marketing majors. So, and I had to extend that was perhaps my best decision to date, was to graduate 1 year later. So I took another major. So I was finance major, then I became also like a double major in stats. And I think that's where we overlapped with you, Brian, like around those classes with John Wood, who
Yes.
connected us, math minor. And then got lucky to get into the S&T sales and trading for Citi. So the first year was just cash, like stocks trading, which was whatever, pretty tough. And the second year was much better. It was equity derivatives. I was doing equity swaps. And I think I was overhired to the desk, so they just gave me a book that nobody cared about, and I was aggressive to do something, so I turned that book into a $3.5 billion notional AUM with whatever, right? Like, and pretty much connected all the banks, and that's why I understood that. Okay, so maybe I should kind of go on this track, and then after this, couple of years of quantitative research with Brooklyn Risk Advisors, where I was just doing statistics and quantitative research. That's why this whole Bitcoin came up the first time.
So when so you were in sales and trading, when blockchain and Bitcoin first came on the scene, what was it about blockchain, or maybe more specifically, Bitcoin, that made you think, hey, I should turn the corner a little bit and focus on this technology, because you had a career, you had an established career, that has a lot of growth and a lot of potential, a very great career potentially in sales and trading. So what made you decide, I need to move into Bitcoin, I need to move into blockchain?
Well, first of all, it was the decision to get out of the corporate world from Citi. That's how I first joined the Brooklyn Risk Advisors and kind of joined this way more entrepreneurial location where I could explore more options, and therefore also have unexpected higher upside, let's put it this way, from that. And you eat what you kill and stuff like that. But then the transition to blockchain really happened 2015, 2016, around those years. And how that happened, I took a trip to Eastern Europe as a volunteer for USAID. So I was pretty, like, again, just random stuff, just random things were happening.
Yes.
And I met developers over there. My whole point was to find developers so we could start, continue trading strategies for stocks, for traditional assets. And they told me that there's this technology called blockchain behind Bitcoin. I'm like, yeah, but Bitcoin is a scam. Come on, like let's do Verizon. Let's do some publicly tradable stuff. Let's do AT&T. Let's do like whatever. But then they really were brainwashing me about the tech of the blockchain itself, and that's where I understood some of the applications. To say that I was completely, back then I knew exactly all the applications such as DeFi, NFT, no, of course not. Like the process of learning the tech and potential applications as the space is dramatically evolving, that learning process takes every single day. So you have to learn every single day. There's no, you do not know anything. You literally don't. You have to keep learning every day.
Right. So, in that vein, I'm going to take a step back, for our audience who might not be, as familiar with, the foundations and fundamentals of blockchain and cryptocurrency, because, we always feel that in order for people to consider thinking about, investing in something, from a financial investment perspective or a personal investment perspective, you have to understand what you're investing in. Right. And that's what you took steps to do early on with Bitcoin and blockchain. So let's take a step back, and could we just discuss, what is blockchain fundamentally, and then how does that lead us to crypto and DeFi?
Yeah. So while the number of requests regarding investing in crypto grew tremendously, if you don't know what you're investing in, do not invest ever, even $1. right? That's at least my
Right.
my position on this. Like,
100%
I'm
agree.
anti-gambler. If you want to gamble, just go to Nevada. It's going to be way more fun. Um, Surprisingly, you go to those events, crypto events that happen pretty frequently, and over the years you get the reputation that people can BS to you. So when you ask them, like when I ask them questions, they can't really BS to me and I ask them, did you guys actually make money? The majority of them, being in the space, actually lost money, despite 6x in Bitcoin last year, literally. So how could you lose money in this market? Well, clearly because they don't get the fundamentals. So let's get to the fundamentals really fast. So, there are no good books, no good sources at this point of time that you could read and just get it. You should read articles or watch videos, literally, and just read it, like just try to ask questions. Ideally, find a developer friend who will just be answering other questions. So the simple explanation to what blockchain is just a database on crack. It's a really fancy, amazing database. And then what blockchain is solving as a problem, it's solving the problem of trust. So internet will be solving the problem of communication, for example, and blockchain is solving the problem of trust. Two separate problems to be solved. They overlap for sure. A quick example on that is, say, Amazon, right? Like you could trust, the rank of buyers and sellers, but when blockchain evolves, blockchain technology, public blockchain technology evolves to the point where, say, those e-commerce solutions could be more mainstream and cheaper as far as operational fees. That e-commerce project or projects will absolutely demolish Amazon. So that's right, because Amazon is using internet to solve the problem of trust,
Right.
while
Right.
blockchain can solve it much, much easier.
I mean, to use that example, the problem of trust. Yes, we tend to trust, Amazon's, algorithm and system for ranking, trust of vendors, buyers and sellers. But they maintain that, right? That's system they maintain. They have control over. They could manipulate and change how they see fit potentially, right?
Exactly.
How does the blockchain change that? Make it
So blockchain technology, again, there are lots of projects who call themselves blockchain. 99% of those projects are not blockchain. The 1% that is remaining is trying to solve the issue of trust by distributing the database of data between all the participants. That's the ideal state. So therefore, if somebody tries to change that database, the remaining players will say, hey, like, why are you changing that? So
right.
that's how that trustworthiness is.
No one person has full control over that, database, or when we kind of shift into talking about cryptocurrency, that ledger of transactions, right?
Correct.
So let's move in that direction. So how does cryptocurrency and Bitcoin use the blockchain to create this digital currency?
Yeah. So again, what is blockchain? Blockchain is trust, and that's why it's important to remember that. What is money? Money is also trust. Like the more I'm thinking about this, there are definitely some, paranoid, media out there who says that, hey, like, money is not backed up by anything. But the other day, I hear this constantly, but then it really started getting to me too, like slowly, to the point where I really, really believe that, like, dollars in your pocket right now, they're really backed up by nothing. This inflation just happened when prices grew, 25%, and they
Yes.
said the official inflation is 5 or 6%. Like, what kind of BS is that? So, and it's not backed by anything. So they can print more money. It's not backed up by, by the gold standard, for example.
Right.
So money is trust. And when you do have that trust, the first most basic and most obvious application of blockchain, of course, is money. And that's how Bitcoin appeared. However, that same application range could go from to the supply chain, to the healthcare, to the government. So literally anywhere, any business that has a database could implement blockchain, literally. And guess what? Every single business does have a database. So therefore like when you have an exchange of value, whether it's money or contracts or leases or whatever, every single one of those exchanges could technically be ported onto this or that blockchain solution down the road.
Got it. So this kind of distributed, database distributed, record keeping, among all participants in the system. That's essentially what blockchain creates, and it has a lot of implications, beyond finance. Now, so when we talk about Bitcoin, how did that get started, and why is that kind of the representative cryptocurrency that people kind of default to and think about first, and what's pushing people into looking at Bitcoin particularly?
Yeah, and again, the more I'm thinking about this, the more, and the more I'm analyzing it, the more like nobody has a real answer, and people who say they do, they don't. They just say they do with confidence. But the more I'm thinking about this, the more I'm realizing why Bitcoin really became where it became. So Bitcoin was the first more or less popularized, decentralized asset out there. There have been some projects like this, eGold, for example, before, but they didn't get that popularity. So Bitcoin pretty much became, say, the second project like that. And again, it's very, very hard to say why Bitcoin became what it became. It went through a bunch of iterations as far as the marketing message. So initially, that was for the bad guys, like for drugs, for guns, for like the Silk Road, those kind of people.
Right.
And then it quickly pivoted into digital gold. And that name cryptocurrency also was coined way back in the day, despite the fact that cryptocurrency with such high levels of returns is clearly not a cryptocurrency.
Right.
Lots of critics have been saying, hey, like it's not a currency because it doesn't have like this or that. Like it's not a fixed store of value. I think they said it changes all the time. Well, yeah, because initially, in order to get to the maturity stage, of course, the growth of Bitcoin will be significant relative to other assets. If you look at the history of, say, USD versus British pound in the 20th century, USD actually appreciated 4 or 5 times in that 100 years versus the pound to get to that dominated position of being the global currency. So Bitcoin, of course, is growing at a much, much faster rate. If you remove the outliers, that's about 70-75% a year, every year over the last 10 years. That one outlier year is, I think the year, I could be wrong here, but I think that's where it grew by 5,300% in 1 year. So imagine having that, having that 5,300% into the average would be like 100% plus.
Sure.
Of course, such growth is not necessarily sustainable. Currently, the market cap overall is what, $2 to $3 trillion.
Right.
Gold's market cap is what, $8 trillion. But because of the inflation and because of kind of the feedback I'm receiving from guys in the gold industry, chances are gold in the next 10-20 years will become an $18 trillion market, and Bitcoin could easily, Bitcoin and other cryptocurrencies could easily match that. So going back to the initial question, why Bitcoin specifically, just got this popularity, just got this initial kind of overview. There was a community behind it. And you quickly realize with blockchain technology overall, and Bitcoin in particular, that a project without the community means nothing. It's very logical when you talk about, say, some traditional startups in the Silicon Valley that just operate on the internet, where you can build stuff, but if there are no clients or users, like who cares? The blockchain, what it enables right away, and the genius part of it, if it's true blockchain, is it creates a proper ecosystem with proper incentive mechanisms for members to join. So it assumes no voluntarism. It counts. It absolutely does not count on people being good people. It counts on people being, driven by money or power or some resources, and it accurately captures that and provides those necessary incentives to make sure that the necessary players are maintaining that specific ecosystem. And that's the genius part. So the genius part about blockchain and Bitcoin in particular is not just a technological play, but it's also a socioeconomic play merged in.
I see. Okay. So because there is the community, that has kind of rallied around it, that is what sustains the power and the value of blockchain, in this case Bitcoin.
Plus incentives. So in terms of Bitcoin, let's just quickly analyze it. So how many players are there? How many types of players in Bitcoin? I mean, of course, not right now there are custodians and exchanges, but before this whole kind of popularization, specifically Bitcoin had miners, developers, and users. So miners are incentivized to be good miners because they get Bitcoins. Developers incentivized to provide good, trustworthy code because they, pre-mine those Bitcoins and they would or keep mining those Bitcoins, and they incentivize to make sure Bitcoin price keeps growing higher. Users are incentivized to use Bitcoin for a variety of reasons. Um, one of such reasons, for example, is again inflation. So easy for us here in the US to say, like, you guys just covered 529. First of all, thank you. I didn't know about this. I definitely need to check this out. But we have 529 401k, Roth IRA, Roth 401k, all types of financial markets, anything. Like, we have REITs for the real estate. You don't have to deal with all the management stuff. Just invest in real estate. Yeah, the dividends will suck, but still. You have dividend stocks, you have growth stocks, you have
Yes.
emerging stocks, you have the blue chip stocks. You have bonds if you, for whatever reason, want to do this. If we have some municipal bonds, like, the capital markets are extremely. You have real estate, you have alternative assets such as futures. You have pretty liquid options market for the majority of of instruments out there.
Sure.
That's US. Maybe that's UK. To some extent, that's Singapore, Tokyo, Hong Kong. But you take the rest of the world, and again, it's just like, it slowly gets like, you talk to people, you travel around the world, and you ask questions. Like, say I'm from Russia initially, so say in Russia, I wanted to consider purchasing real estate, like just for as a rental property, for example, rental properties. So I was asking questions like, why does anybody buy real estate in Russia? And the answer is not for appreciation, as far as how here we judge it, like, oh, let's look at the monthly cash flow and blah blah. The reason there is to park your money, so you are offered a hedge against Russian ruble inflation. So you do purchase a real estate, and you expect to beat inflation, and that's pretty much it. So of course, and Russia is like top 10 countries based on GDP in the world. So that's like outside of those 5 great markets,
Right.
US, UK, and so Bitcoin in this specific situation, as far as the rest of the cryptocurrencies offer capital markets to the world, they have been lacking. When you look at the savings rate globally, because the yields on borrowing yields are so low in the US for so many years, there's no incentive to save money.
That's right.
While in emerging countries, there's a huge incentive to save. Then we look at the savings per capita, for the top 10%. Of course, it's much higher, proportional per GDP per capita adjustments in emerging countries. Where do they invest that money? Of course, they could go and get that from you get the exposure to say S&P 500, but they could get an alternative exposure to crypto, and they have been feeling those prices. So that has been really like what kind of that iteration of Bitcoin, starting from some cool tech to the kind of crypto for bad guys, slowly merged into the digital gold, and in my opinion now slowly merging towards like the source of alternative capital market returns for the emerging world. And the emerging world does include China with huge capital, India with huge capital, Brazil with huge capital, and so on.
Right. That's a very insightful perspective. Because it's one thing to kind of, for those of us in the US, to be very US centric, say, yeah, why this? We have so many other options. But to take that global view and to understand that the majority of the rest of the world does not have as many options for investment vehicles as the US. I like the point that you drew around, in emerging markets, there's a huge incentive to save, because where else would you put the money? And why real estate is such a big draw, in places like Russia and China, especially, right? As we
those
saw.
Ghost towns there, yeah, we should have those ghost towns. That's just another iteration in both countries that I know for a fact. Because there's just no way to park your money. You will lose on inflation. So like, so that's the incentive. So that's now the play, it seems like, and that play will continue for the next 5-10 years until either like local capital markets will emerge, or if it's not going to emerge, then the trend will continue.
Right.
In terms of crypto. Yeah.
Right. No, it's fascinating. Yeah, to see kind of that's where the investment inflows are going, because of it's sometimes the better option. Interestingly.
Yep.
Interesting. For full disclosure for folks on the call, I do not currently have any holdings of Bitcoin or cryptocurrency.
Come on,
This is
man.
part of my Peter.
Come on.
Part of this though is, as you said up front, I need to better understand, and part of this is to, is education for, the audience and also myself. To understand, what is it, what are the trends. So I want to make sure that people don't misinterpret me trying to push Bitcoin by inviting you here, but this is for educational purposes, for people to understand and make their own decisions.
Well, if you're not gonna push, I gotta push. Not a financial advice.
Exactly. That's why you're here. That's why you're working in the industry, because you see the future. And as do we all in different ways. Which is why I'm fascinated in this topic. So I want to jump to some of the audience questions. Some good ones that come up that really relate to topics that I wanted to cover. So blockchain is an emerging technology, as you've mentioned, and as it is, it creates opportunities for a growing workforce in that domain. Do you see a skill gap in in the blockchain space? Like, are there more roles than there are people to fill them? And if so, are there ways that people can get more involved or educate themselves so that they can get jobs in blockchain?
Yeah. So first of all, again, statistics is statistics. As everybody's saying, whatever, 95% of statistics is wrong, including that one. Just like Elon Musk mentioned that too, on the panel with Jack Ma.
Mm-hmm.
Based on the stats, and whether the stats is correct or not, about 200 million people in the world hold any crypto out of 7.5 billion. That puts us in the rank of 2.5 to 3%.
Mm-hmm.
That's despite the fact that crypto is at 2 trillion right now. So that, you could try to prorata, the next move. So looking at the overall market caps, and kind of overall numbers, to put everything in perspective, the global GDP is about $75 trillion per year. The overall net worth of the world is about $435 trillion. These are the numbers that I kind of have.
Right.
Now, of which 2 trillion is Bitcoin. Now, of course, Bitcoin and other cryptos. Now, of course, when we are looking at Bitcoin and the 21 million supply of Bitcoins out there, you have to understand that about 4 to 5 million of that belongs to Satoshi, and those may not, Satoshi, who is the founder, and those may not be moved. Maybe he's dead already. Nobody knows. About 25% of the remaining Bitcoins are lost passwords to. So therefore, the overall, right? So like 16. So let's assume 21 million minus 4, like say minus 4, just to make it easier. 17 million left, of which quarter is gone. So that's like about 12 million Bitcoins. All right. So that's like to put the valuations and to put the things in place. So that's the reality. Now we have a bunch of projects out there, but I'd say, more or less recognizable ones are maybe top 100 projects. And of course, there's a huge hunger for talent. I get reached out by a recruiter almost every single day for all types of things, whether it's an enterprise project or a crypto project. The hunger is insane. It's absolutely insane. The qualification, the quality of the talent currently is very low. Again, I'm just being very blunt. So if you know your stuff, and if you're willing to learn, and if you're willing to do your job, the opportunities in the space are amazing. And those opportunities are both on the enterprise corporate spectrum, such as companies, again, they don't pay me, such as Coinbase, for example, right? Or such as Kraken, like those exchanges, more developed exchanges. But at this point of time, more than 1,000 people, which is considered to be very, very high for a crypto project. And ranging to more, smaller projects that would also give you some type of incentive as a token. But pretty much that's a profit share, like stock options kind of deal, right? But the gap, of supply and demand is absolutely insane. It's huge, and it's going to keep being huge for the next 5 years because if you're any good, you made your money. Then if you are medium good, you could just get lucky on the upside from any of the things that you invested in.
Mhm.
That also kind of disincentivizes you to keep, to migrate from being medium, to being great.
Mhm.
So just keep that in mind, everybody. If anybody's trying to break in, this is the perfect time to break in. That's a long answer to the question. Sorry.
Right. No, that's helpful. Now, and for those who are trying to break in, there's so much media, on crypto, which may not be that reliable or not that mature. Are there any sources that you recommend for people to do their own due diligence to, learn more about the crypto space, whether it is for personal investing purposes or for educating themselves to enter the crypto, workforce? Are there any sites or forums or white papers that would be good for people to read? Maybe books?
Nothing in particular, including my book. Nothing in particular.
Including your book.
Again, yeah, I'll be straightforward. Like I tried, but the opportunity for anybody to really explain what's happening is very limited. So the most important part that needs to be extremely well understood is the decentralization aspect and how the decentralization aspect and the mechanism could be enforced. Specific example, yesterday I spoke to one gentleman who is in the space for many, many years. He's established, he's high net worth without crypto. With the crypto, he's even more high net worth. We discussed potential, kind of trying to revisit one of the projects, and he's been telling me there's this hot thing about bridges right now. For example, bridge from one blockchain to another blockchain, right? Mm-hmm. That's a pretty hot topic overall. Everybody's trying to solve it. Me and my team, for example, has the solution to that already. And the gentleman mentioned, okay, there's this other project where this bridge is already done between Bitcoin and Ethereum. So, and it's decentralized bridge. And my initial reaction is no, and he's clearly invested into that project. He doesn't know the tech, but he's invested. Now, the general understanding, where could you find the information that this bridge that project is claiming is false? Well, if you think about it, you will know that Bitcoin does not have smart contract functionality, and Ethereum does. So on Ethereum, you could have decentralized bridges through the smart contracts. On Bitcoin, you cannot, because somebody will have to own the private key. So you could play around and create all the ranking system on the Bitcoin side to create a decentralized bridge, but it's going to be games. It's not going to be the actual decentralization, because the whole point of Bitcoin is one person, one key. Two people cannot, you can't create a way to create an escrow account on Bitcoin. So therefore, the project that claims a decentralized bridge between Bitcoin and Ethereum by itself, they are BSing, right? So how would you know that? Which source do you have to read to really know that this is not decentralized? If you go to the white paper of that project, that will BS you that it's decentralized. If you go to Reddit or Telegram group, those groups will also BS you that it's decentralized. So it's very, very difficult to really get that source of truth out there at the moment, because there's lots of shilling being promoted in the projects. Sure. And so you have to really understand the basics, and that takes time. But once you do understand the basics, in depth, not just kind of understand, but really in depth understand it. You guys, for example, Brian and Ed, you guys understand this whole kind of personal finance from perspective of what really makes sense, what really does not make sense. What's my risk? How to measure risk, what, right? So you really understand it. It's in depth. So once you in depth understand the blockchain side, then it's going to be much easier for you to judge any project for the validity of decentralization or not. Because at the end of the day, decentralization is worth something and centralized worth much less. That's why decentralization aspect is so much important, so important in space. Right. So that's, you can't have one, book or one article or one whatever really explaining what's going on. You just have to be immersed in the space. Based on my kind of observation, it takes about 6 to 12 months for a person who doesn't know anything to be, I'd say, at 10% of knowledge. 100% say like ideal knowledge, like God. 0% knows nothing. So from 0 to 10%, it takes about 6 to 12 months. Now, sounds like, oh, it's only 10%. Yeah, but the rest of the world knows blockchain and Bitcoin and understands blockchain and Bitcoin at the rate of 0.01%.
Mm.
So the relativity of understanding in that 6 to 12 month period could be dramatic, and that could be valued not by you personally as a person who learned that, but also by the employers or investors.
And so, how does one get to that 10% of knowledge? Given there's no one understood. There's no one source for great knowledge in the space. But is there a combination of resources that people can look into and read about? For people who are not in the industry at all right now, what can they do to get started?
Yeah, I could be okay. So let me try to be politically correct and
Sure.
still respond to this question. I do believe that forcing yourself and trying to impose this, self-discipline onto yourself regarding any particular topic is a wrong approach. If you don't know anything about coding and then you can become a coder in the next 6 months without passion for coding, you'll be a very mediocre coder.
Sure.
You'll still be a coder, but you're not going to enjoy what you do. And I do believe that in my situation, crypto somehow found me, and crypto somehow is what I really believe in. And what I really believe in deep inside is apparently something close to like libertarianism. And if you ask me if I'm a libertarian, I don't know, because I do not know in depth, I do not have that in-depth understanding what libertarianism really means. But based on people in the industry who really would like that capitalism without government kind of intervention, that's what I almost kind of believed in, and that's what the space is believing in. Mm-hmm. And that is kind of subconsciously, but still drives you to learn more, right? So while if you don't really believe in this, it's going to be very difficult for you to learn anything about it. It's just not going to excite you. Mm-hmm. And that's a very, very kind of politically correct, but still blunt answer to the question. So how to get to that 10%? If you really believe that what's happening right now in the world, with literally anything regarding, limitations imposed by the government are kind of not right, and you do believe in it, and you actually get pissed when yet another regulation comes out, whether it's like any regulation, whether it's regulation from the SEC or from FINRA on the financial side, or it's regulation from the health department, or it's regulation from whatever. If you're really pissed about it, chances are you're the blockchain material. Again, not necessarily, but that's what I've been seeing. And once you understand that you're the blockchain crypto material, then of course you just kind of get that way, like you really understand that path of how blockchain solves the issue of trust, and then it just goes by itself. You'll find people who, like-minded individuals who will be kind of, you'll be learning with them, or they'll be teaching you. You'll be able to find a bunch of sources out there. You'll be just watching, and it's going to be nonstop. Mm-hmm. And despite the fact that lots of people join crypto for the sake of, again, supposedly, making 1000x returns, based on my experience, they still share those beliefs in majority of cases. They still share, like it's still a pretty libertarian kind of place. Okay.
So, the way forward is, you have to have a passion for it. You really need to believe, in
the solution,
in the solution, the philosophy.
Correct.
And,
that's my personal opinion. I could be wrong.
The key would be to get involved in the community, and it's really by talking about and discussing it, because this is a new field. There are no textbooks on this, so it's very hard to pin down a particular source. Is that right?
Much, you are really trying to solve you're really trying to solve a problem. You're really trying to save the world somehow, or it's not going to work. Again, that's just my personal opinion, because again, depends on what you want to do. Like if the aspiration is to become top 100 projects in the world with actual value to the community who is in that project, in my opinion, you have to really share those beliefs. If you just want to join the space and kind of be in the space, I mean, yeah, of course. I mean, it's all acceptable, accept all types of, everything. Like it's still very, very highly diversified. But something is telling me that something is telling me that when Coinbase CEO can sue SEC, something is telling me he's not really pro-government, right? Like stuff like that.
Okay. So I know we're running a little short in time, but I do want to just touch on maybe like two final questions, getting back into the personal investing side of things. So one is, Coinbase, IPO'd, and they're one of the big platforms for trading coins. What other applications or companies are big in the big or maybe more reliable in the coin trading space? And then the follow-up question to that would be, how does one really value a cryptocurrency?
Yeah, let's start with the valuation. So there are
Sure.
multiple. I do have a video on YouTube I recorded
Yeah.
a year and a half ago about valuation. So multiple ways to put a value to crypto. So let's start with, say, Bitcoin. So my personal view was, how about we value the infrastructure? So how many miners out there and how many mining machines out there? Like, what's the actual cost of that machinery? We could estimate that, and then let's assign some type of ratio for the tangible assets, and then assign the value for the intangible assets associated with just traditional market ratios. And when I did that video in the beginning of 2020, the predicted price was 20K, and Bitcoin is trading at 6. Now, of course, it didn't rally to 60, and of course, at 60, I think it's pretty overvalued. I think the fair price value is probably around 20-25 based on that specific model, because that model uses pretty aggressive ratios, assuming that technology is super novel, right? So it's using like those growth kind of stock ratios. Now, that's one model. So you look at the tangible and intangible assets and apply certain type of ratios, and then you divide by the total number. That applies to Bitcoin. When it comes down to Ethereum, when it comes down to Litecoin, when it comes down to Binance,
Yes.
that valuation model breaks because there are no freaking assets. And why Binance is so high, I have no idea. It's lots of hype and intangibles. There's not like, it's just crazy to me. Same thing applies to the majority of coins. Of course, I'm happy that it grows.
Sure.
It's great for me, but kind of the statistician inside of me is saying like, what the hell is going on? That's one model. Second model is the trustworthiness of the network from the hacker perspective. So how much resources will be spent to hack the Bitcoin network, for example. So you try to estimate that based on the hashing power, and then you try to put the value to Bitcoin. Then if you do that computation, of course, I don't think it takes $1 trillion to hack Bitcoin. I think it takes much less potentially, but again, who am I?
Right.
Third model suggested by my ex-boss from Wall Street, Greg Rooney. He was a trader. He's like, well, same thing as Oswald Demodaran, who's our professor at NYU.
Yes.
For financial management or corporate finance, right? Whatever. I didn't take his course, unfortunately. But it's all about storytelling, right? So, quick example from Uber perspective. So, Uber, first of all, it was just a taxi kind of substitute, right? Taxi cab substitute. But then it became a truck driver, like a trucks substitute, like self-driving, like pretty much disrupting not just taxi industry but also truck industry. So boom, now the valuation is much higher because of the storytelling. So same thing with Bitcoin. The storytelling is, it was for the bad guys first. What's the market for the bad guys? But now it's digital gold. So what's the market for the digital gold? Then the next story is, if the story of Bitcoin is the substitute for capital markets globally, what's that market size?
Right.
So then that's the storytelling. So based on my boss's estimation, Greg, his numbers were crazy. Like 500,000, 1 million is like super possible in the next 10 years. And that's the third model. So that's for Bitcoin. As far as everything else, such as Ethereum, Binance, Algorand, Near Protocol, like all these other guys, these models break completely because there's nothing like like the fact that, say, Algorand, with all due respect, is at such high valuation, I do not understand why. I really don't. It just right, or even Ethereum, why it's so high. Yes, huge demand. Yes, lots of applications, but still, like the usability, whatever. So that's to give you an answer to the valuation. Now, the usefulness of what I just mentioned, so that I don't waste anybody's time, is if you kind of could put a value to Bitcoin, then you can put a value to all the other top cryptocurrencies as well, because they're very, very highly correlated. So if you think where Bitcoin will be, then you kind of know where the rest of the cryptos will be at some type of beta, right? That you could also try to estimate history. Boom. Now, as far as where can you buy altcoins as a US investor, if possible, I would like to skip that question. Reason why is I did not buy a single crypto in my life.
Okay. I see. Okay.
Reason, same thing as Brian, as yours. Same exact reason. Not that I don't have exposure to crypto, but I'd never purchased it.
I see. Right.
I'm going to jump in here because I think that's a really interesting point that Peter just made. And I think it's one of the questions also about how associated Bitcoin is with blockchain. Bitcoin is using the blockchain, but investing in Bitcoin is not the same as investing in blockchain. I think blockchain has tons of applications, which is really what you're focused on, Peter. But that is different than just the cryptocurrency market and throwing money at Bitcoin or Dogecoin and all these other coins. I think that's fundamentally what the media has really distorted, is just really combining Bitcoin with blockchain, and I think the two aren't the same.
They aren't the same, and there's an NYU blockchain fund. I get that ad. You probably guys also get that ad on LinkedIn all the time. Recently, they're opening like a blockchain fund number 2, and I'm pretty sure all they do is just invest in cryptocurrencies. That's and they call it a blockchain fund. With all due respect to our alma mater, but yes, that is 100% correct. The focus on blockchain. Here's why I like that more. You do not know what's going to happen to crypto in the long run. It's probably going to grow. But you still don't know. But you definitely know that the blockchain technology itself is very bullish, and here's why. Of course, in the case of Bitcoin, the number of players are potentially infinite. Well, not infinite, finite by the number of by the number of users, by people who live on this planet, right? But when it comes down to, say, enterprise applications, the number of users there could be dropped significantly. Let's assume you try to optimize supply chain for Walmart. How many players do you really have there? Maybe 50, maybe 100. One of the projects we did, healthcare. There were 20 types of players. All in all, maybe 20 types of stakeholders, 25 types of stakeholders. But all in all, maybe it would account to, I don't know, like 10,000, 20,000, including like actual employees. Like everybody, all in all, maybe 20,000 users. And it would still be a decentralized play. Now, decentralized does not mean completely decentralized. Decentralized means more decentralized than now, where it's completely centralized, right? So there's a level of decentralization at all times. Even in Bitcoin, while everybody says it's completely decentralized and everything's done by math, and I personally completely in love with Bitcoin, like completely. There's nothing that, most likely nothing could happen for me to dislike it. It's still extremely centralized. There are only 4 major pools that pretty much control everything. Right. So if you try to mine Bitcoin right now, good luck. You're not going to be able to. Like, well, I mean, you'll be able to, but you may get a reward like once in 200 years. Right. So it's like pretty much, tending to approach zero. So yes, a blockchain is what, and having that mindset that blockchain is really what like joining the field for the blockchain, not for crypto, in my personal opinion, is way more sustainable. And that, like me personally, that's why, absolutely, that's why I'm in the space. I'm in the space not for crypto, I'm in the space for blockchain, 100%.
Fantastic. Well, we've gone a little bit over our time, but this is a phenomenal topic that deserves, a lot of attention. And for sure, Peter, we'd love to have you back again for part 2 sometime, sometime in 2022 for sure, as the industry continues to evolve and we see, the trends and the technology continue to evolve. I'd like to, recap some of the, key insights and messages I took away from this talk, which I really enjoyed. Blockchain at its core is about trust. Money is also about trust. The challenges and opportunities that blockchain can solve for are tremendous. People should be cautious when considering investments in alternative coins. As you said, you should not put a single dollar of your money into something if you do not understand how it works. And for those of us who are looking to get involved in the blockchain space to find career opportunities in that space, get involved in the community, as there's not one single text that can give you all the answers that you need. You need to be talking to people, engaging with people, taking action to really evolve in the space, your particular knowledge. And there's a lot of projects that are underway to solve a lot of these problems that we talked about. But of course, a lot of these things are very sensitive and under NDAs, so we're not able to go into any specifics for these projects. But Peter, we completely, are enchanted by your talk on blockchain and crypto. We've learned a lot today. I hope to bring you back soon. And I'd like to thank everyone in the audience for joining us today. I wish you all a happy Thanksgiving. Shout out again to our veterans and military service members. Hope you all have a wonderful rest of the month and take care. We'll see you next time.
Thank you so much, everybody. Bye.
Thank you, Peter. Thank you, everyone. Stay safe. Stay well.
Thanks, guys.
Bye.
See you next time.
See you.